Hello friends, did you know that Asian Paints, which is India's #1 paints company, has given its shareholders a CAGR returns of 28.34% in the last 19 years? Well, in this video, I am going to analyze the reasons for it, and also I will do a fundamental analysis of the company. So just sit back, relax and enjoy the video till the end. Friends, my name is Karthik and my mission is to spread the knowledge about the world of commerce under one umbrella, which is the Combrella. So friends, Asian Paints was started in the year 1942 as a partnership firm in a small garage in Mumbai by a group of 4 friends: Champaklal Choksi, Chimanlal Choksi, Suryakant Dani and Arvind Vakil. Okay, so this is their photo. Apart from this, no other photo of them is available in the internet. So this is their only particular photo available. And after 1942, the partnership firm was converted into a private limited company in the year 1945. And Asian Paints got listed in the stock exchange in the year 1983. Currently, friends, Asian Paints is a professionally managed and run company, with the promoter family also having a substantial stake in the shareholding of the company. So friends, Asian Paints is India's #1 paints company. It is 3rd largest paints company in Asia and 9th largest paint company in the world globally. Okay, and Asian Paints has 26 manufacturing facilities worldwide, 70,000 plus dealer networks in India, which is the largest number of dealers of any paint company in India, operations in 14 countries, consumers in 60 countries. Okay, so this is the size of Asian Paints. And if you see the products and the product portfolio of Asian Paints, the main product, which is the paints, is divided into various categories such as decorative paints and industrial paints, and within that, interior and exterior paints. So this forms part of the majority of the major chunk of the revenue of Asian Paints, which is the paints. Apart from that, it has chemicals, wall coverings, these are the traditional products. Apart from that, the company is now diversifying into new age of products and services such as adhesives, modular kitchens, wardrobes, bath fittings, waterproofing products and services. And apart from that, it is also going into home services, home painting services, interior designing services. Okay, so if you see, it is not just a paint company only anymore. It is now going or becoming into a full-fledged home decor company with facilities such as furniture, bath fittings, kitchens, waterproofing solutions, etc. So it's a one-stop solution for all your home setup needs. Okay, so that is where it is going towards the future. Okay, now let us understand and analyze the macroeconomic factors about this paints industry, friends. Okay, so if you see, friends, the paint industry as such is always and will always have an evergreen growing demand for the paints, because more people will continuously keep buying their houses and will also renovate their houses more frequently than the past. Also, there are a lot of government schemes which are promoting household sector such as Pradhan Mantri Awas Yojana. And coming to the industrial paints division, if you see, industrial paints also will always have a steady and good demand in the future as more and more industries come to India. Okay, so obviously the paints industry, if you see, friends, India is also the world's 3rd largest consumer of paints by volume. Okay, so that is also another good macroeconomic factor to be considered. So if you see this industry and this company as such also, if you see, there will not be a bumper or a super duper rapid growth in the paints industry, but understand that Asian Paints is a market leader of this industry and with a huge margin. Okay, which I will also explain the margin of Asian Paints and other companies. I will explain that in the financial analysis part of the video. Then you will understand how big is Asian Paints as compared to its competitors, because of which it is actually enjoys a market competitive moat, and it can actually kill the competition. Okay, hence this is one of the best blue chip companies in the paints sector industry which you can have in your portfolio. Basically, it's an Indian multinational giant. So now let us understand and analyze the financial statements of the company, which is the core part of this particular video. So if you see friends, all the numbers are in crores and all these numbers are taken from consolidated financial statements. So if you see the revenue of the company, okay, for the year ended March 2021 has been 21,713 crores. And if you see the last 5 years, the growth in revenue has been at the rate of 5.19% CAGR. Okay, so the growth rate is very small. I will explain the reason as to why the growth rate is less in the later part of this particular video. Then if you see the profit after tax, the PAT of the company for the year ended March 21, it has been 3,207 crores. And last 5 years CAGR growth rate of profit has been 10.01%. Okay, and if you see the PAT margins, that is the net profit margins of the company for this year ended March 21 has been 14.77%, and last 5 years you can see the PAT margins are 13.75, 11.5, 11.75. So I would say the PAT margins are actually very decent as far as the paint industry is concerned. Okay, now if you see the 9 months results for this current financial year 21-22, if you see the 31st December 2021 and compare that with 31st December 2020 and 2019, the revenue of the company for this 9 months ended December 2021 has been 21,209 crores. Last December was 15,000 crores. Before that it was 15,576 crores. So if you see, the revenue has crossed the pre-pandemic level. So company is back to normals, has even performed better than the pre-pandemic level as far as revenue has been concerned. But if you see the PAT, December 21, it has been 2,211 crores. Previous December was 2,337 crores. Before that 2,294 crores. So PAT has declined by 3.62% if you compare with the pre-pandemic levels of December 19. Okay, so these were the revenue and PAT numbers for this 9 months ended period. If you see the EBITDA friends, which is the operating profit of the company, year ended March 21, it was 5,159 crores. Last 5 years it has grown at the rate of 9.69% friends. Okay, then another important metric, which is return on average capital employed. If you see, for this year ended March 2021, return on average capital employed has been 35.4%. I would say really good, a very high, return on capital employed. And last 5 years you can see it is always in the range of 35% only. Okay, so very good return on capital employed. Return on average net worth, if you see, 31st March 2021 has been 27%. And last 5 years also, if you see friends, it is always in the range of 27-26% only. So good profitability ratios. Now let us go to the balance sheet friends. The borrowings of the company is very less. Okay, only 353 crores year ended March 21, and that too this is for a foreign subsidiary, and interest rate is very low, only 2% rate of interest. So India operations does not have any borrowings. Okay, and the borrowings as compared to the size of the company very less, and the company has huge cash, and even tremendous amount of cash to repay this borrowing. So borrowings is not even a concern for this particular company. If you see the current ratio, March 21 has been 2.03, last 5 years 1.73, 1.63 if you see. So current ratio has also been, if you see, it's a decent current ratio, which gives you good, point of view about the working capital and the cash flow requirements of the company. Then if we see the net worth of the company friends, okay, it has been 12,806 crores. Last 5 years it has grown at a CAGR of 11%. Okay, net worth also has grown consistently. Now coming to important part, which is the free cash flow. Last 5 years, if you see friends, grown at a CAGR of 30.17%. Amazing free cash flow growth. And year ended 21, it was 3,429 crores. Good growth in free cash flow numbers friends. So if you see friends, the financial analysis, the fundamentally company has actually very strong, good fundamentals, market leader and good fundamentals makes the company a really robust as far as financials are concerned. Okay, now let us just see the peers, comparison of Asian Paints with other companies in this industry. If we take Berger Paints, which is second largest company by market value, and Kansai Nerolac, which is the third largest company by market value, and compare that with Asian Paints. Let us compare the revenue. Okay, if you add the revenues of Berger and Kansai Nerolac, both this put together, then also the revenue of these two companies is lesser compared to Asian Paints. So revenue of Asian Paints is 1.83 times the revenue of the 1.83 times the combined revenue of these two companies put together, friends. This is the size of Asian Paints. Profit of Asian Paints is 2.57 times the combined profit of Berger and Nerolac. So you can imagine, revenue 1.83 times, profit 2.57 times the combined of these two entities put together. That's how big Asian Paints is, and that's how the competitive moat which Asian Paints enjoys in this particular industry. And if we see the revenue growth of 5 years of Berger has been 6.818%. Asian Paints grew at 5.19%. Last 5 years profit growth of Berger 8.7%. Asian Paints 10%. So if you see, friends, the industry as such has not grown very rapidly. So as such, in that industry the growth has been very nominal, and hence Asian Paints also has not grown significantly. So we don't know the reasons what it can be. So Asian Paints, being the market leader in the future, has good potential as far as this industry is concerned. Now coming to the rewards which the Asian Paints has given to its shareholders. If you look at the market cap of the company as on year ended March 21, it was for 2,43,000 crores. Okay, and if you see the last 5 years, the market cap has grown at a rate of 23.92%, approximately 24% rate of growth in market cap, from 83,000 crores to 2,43,000 crores. If you compare even more farther, if you take the market cap of the company in 2002, which was 2,125 crores, to 2021, it has been 2,43,000 crores, which gives you growth rate of 28.34% CAGR per annum. Okay, amazing growth in market capitalization, the reward to the shareholders. Which means if you had invested 1,000 rupees in Asian Paints in 2002, it would have become 1,14,000. Okay, by the end of 2021 March, which approximately is 115 times in 19 years, friends. That is the amount of wealth which Asian Paints has created to its shareholders, and all these numbers are without even adding the dividends. Okay, now if you see the dividends of the company given by Asian Paints, okay, dividend per share for the last 5 years, it has been 18 rupees, 12, 11, 9 and 10 rupees per share. So decent one. And total dividend payout, if you see, has been 1,712 crores for the year ended March 21, and last 5 years you can see 1,151 crores, 1,007, 835, 988 crores. Dividends grown at a rate of 11.62%. So good reward of shareholders to this for this particular company. If you see the bonus given by the company, bonus shares, 2 bonus given by the company, one in 2003 ratio of 1:2, and one in 2000 in the ratio of 3:5. Stock split done by the company once in the year 2013 from face value of 10 to face value 1 rupee. Okay, and as far as buybacks is concerned, the company has not done any buybacks in the recent past, or as far as all the information which is available. So good, I would say, rewards to the shareholders given by the company. Now friends, let us look at the valuations. If you see the market price of Asian Paints as on 23rd of February, on the date of shooting this video, it is 3,243 rupees. And if you take March 2021 EPS, trailing 12 months, is 32 rupees. So P ratio comes to 99, close to 100, which is kind of costly. Comparing the P ratio with other companies, Berger P ratio is 87, Kansai Nerolac P ratio is 54. So comparing with this, Asian Paints P ratio is higher, but obviously Asian Paints is the market leader. And friends, it is better to invest with high valuation ratios in companies like Asian Paints, because these are profit making companies, good fundamentally strong companies, and market leader companies, instead of investing in companies like Zomato, Paytm, which are does not have any profits. You don't know what about the future, fundamentally not really strong. But Asian Paints, great fundamentals, hence high PE ratio is justified, at least for these kind of companies, friends. Okay. Now coming to the conclusion, friends, which is very important for you to understand what you can do. Friends, understand that Asian Paints will not double your money in 1 or 2 years. If you're investing, keeping that in mind, don't invest. But definitely you will not lose your money also. Ideally, friends, this is a company wherein you can invest and forget. So if you are invested in this company for 5 years, 10 years, then based on the historical track record, definitely you can get a CAGR of 20% based on the past record which are available, which is a very good percentage. 5 years CAGR of 22%, which means every 3.5 years your money doubles. So that way I would say it is a good company to bet on, blue chip company, amazing historical record, and with that intention you should be investing in your mind. Apart from that, do your own research also, and then only invest in this particular company. So I hope you all like this video about Asian Paints crisp and robust manner, and let me know in the comment section how you liked it. I will see you all in the next video. Until then, this is Karthik signing off. Thank you and namaste.